Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. Apologies, still my internet issue is not getting resolved in Dubai. So I will have to continue to do audio for another 1 or 2 days. Markets were so volatile, markets are just random. But today morning I mentioned in my pre-market a few things. Number one, there is no reason for us to gap down so much today because we have not been following the US markets. But the panic, market gap down open, went further down exactly 200 points. 21,600 was the low in futures. Then from there, market started recovering. In fact, even in the US market, in the last 15 minutes, there was almost 3/4% recovery was there. But don't know why market has to fall so much today. Probably FIIs are selling HDFC Bank in huge quantities. As usual, today morning, the banks were the first one to recover. When banks were trading in green, IT stocks went down. But in addition to IT stocks, HDFC Bank was down. When all banks were higher, HDFC Bank alone was down. Later, State Bank of India met with a short covering. State Bank of India hit a fresh all-time high. It was 4% higher at one point. Then that triggered short covering in HDFC Bank also. Finally, once again today, Bank Nifty made more than 1000 point move. Last Friday, it was up 1000. Monday, it was down 1000. Tuesday, it was up 1000. And then today, it was down 1000, again up 1000. A 6000 point move in just 4 trading sessions. Usually, the Bank Nifty moves only about 1000 point in 1 month. Now, almost every day basis, markets are moving like this. These are just random moves, and intraday players are struggling a lot. At the end of the day, FIIs have sold for about 4,000 crores, and that could be the reason why markets were so weak. I do not know what FIIs are thinking about our market. Initially, it was reported that FIIs are looking into India with a very much favorable way. India, Japan, and Vietnam are the 3 most promising countries. But the way they are selling, probably, they are just booking the profits. They may re-enter the markets maybe after the parliament election. So probably parliament election is a very big event risk. Probably they want to get out. Or probably they are selling HDFC Bank. So they've lost the faith in HDFC Bank. No matter what happens, HDFC Bank is still struggling. And today, I think HDFC Bank hit a fresh swing low. I think with today's lowest point, HDFC Bank, I think it is down about 20%. A 20% fall in such a biggest index heavyweight stock, that's really very, very scary. But markets are recovering even without HDFC Bank support. So today, option prices all like hitting the sky. 10 rupees option going to 100 rupees, 400 rupees in Bank Nifty. Even in Nifty, look at the 22,000 call option that was trading around 4 rupees, 5 rupees in the morning. That went up to 40 rupees. So option premiums were skyrocketing. That's because, Nifty has shot up almost 350 points, I think, from intraday low to intraday high. Even the Nifty moves was very, very big. So anyway, markets are volatile, and with tomorrow, 3 weeks will be over for February expiry, and all these 14 trading sessions so far, every day Nifty has been very, very volatile. Bank Nifty was even more volatile. But one good thing is that as of now, all the big events are over. So the last big event was this US inflation data, that was over yesterday. Only for Nasdaq, Nvidia result, which is on next Tuesday. So that is the only bigger risk, because they call magnificent 7. So 7 big stocks that decide the trend in Nasdaq. 6 results have come already. So only one more, Nvidia, is due. Once that is over, so for the entire February month, there is no more important data. So let us hope market will stabilize at some point of time, and until then, these intraday traders, positional traders, everybody is struggling. Markets are making like 250 point, 300 point Nifty move almost on a day-to-day basis. So we will see tomorrow what is going to happen, and tomorrow is the weekly expiry for Nifty. So that's it for now. Hope you enjoyed listening to this audio. Thank you for listening.